Welcome to SmithWeekly Discussions, an occasional program for our readers and listeners of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine the show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion, we want to say thanks for questions coming from our audience at SmithWeekly, including Luke A. and Nick W. Greg Hall is our guest today. Greg is Executive Director and CEO of Alligator Energy, a uranium-focused explorer with exploration projects in the Alligator River Uranium Province, Northern Territory, and also uranium project interest in South Australia. Alligator Energy also holds a nickel cobalt project in Italy. The company is listed on the Australian Securities Exchange under the symbol AGE. Mr. Hall, how are you?
Very good, thank you, Andrew. I'm keeping well.
Well, Greg, you were kind enough to agree to come on the show, and we had met and spent some time together in Adelaide during the Uranium 2019 conference, of which I would point out that you're part of the organizational team for that conference. And what it was for me that Greg really has industry credibility when you look over his past experience and also due to his extensive Rolodex of industry contacts. Greg really knows most of them, I would say. But first off, Greg, speaking of the Adelaide conference, can you share with us a little bit of a preview of what folks can expect coming out of the conference this year?
Yeah, thanks, Andrew. Certainly, I'm on the organising committee again. It's chaired by Mark Chalmers, of course, who's US-based but has strong links to Adelaide. But the organising team comprises both operational and some academic government people. We try to have a range of speakers here, including some international speakers, either in the nuclear industry or in this year we're trying to get speakers from the SMR industry, as well as some of the nuclear medicine and radiation people here, along with explorers from Australia, from within Australia mostly. But as we're starting to get a bit of international interest, because it's the only uranium conference that's still going on in Australia. It's Adelaide based, and of course this is where most of the uranium production occurs from within Australia. So it's a very good conference. It's well attended, and it is starting to attract some good investor interest. We had good investor interest in the last 2 years. So it's occurring in the first 2 days of July, I believe. It's 1st and 2nd of July, but people can check the Australasian Institute of Mining and Metallurgy website to check for that conference.
Well, Greg, let's go back to the early days for you. What got you into this uranium sector? Where did you start? Who did you meet? Where did you end up, say, by the end of last cycle? We'll stop there and then we'll continue.
Well, look, I grew up in Adelaide and studied mining engineering here and worked in a couple of industries, getting experience in tungsten, metal and gold. But before I even graduated, I managed to score a part-time job with a company called Roxby Management Services, which was the WMC and BP company exploring and developing the Olympic Dam mine. So I was involved on the Olympic Dam project from the early days, 1981 onwards, during the final exploration resource and all the studies. So as a young engineer, getting involved in studies on a 30 to 100-year mine was quite a lot of fun. And of course, I went to site, was the first ventilation engineer and mining engineer, and then became ultimately mine manager up there through the construction development period. So that's when I had a lot of my first contacts with the uranium business, not only within the regulatory side in Australia, but of course with the marketing side, because WMC and BP had marketing people involved with selling the product, both copper and uranium. Post that role, I was seconded to Sweden, to LKAB, the iron ore group, where we did a lot of technology exchange. But it gave me the opportunity while I was in Scandinavia to visit in fact, most of the nuclear facilities in Scandinavia, both the reactors, the reactor sites, plus some of the long-term repository research that was going on at Espoo and at Finland. So that was really what started to spark my interest a lot more in the business. I came back to Australia with Western Mining, was in the nickel business for about 5.5 years, and then departed that to join North Limited, which was bought out by Rio Tinto, and I became Ranger Mine Operations Manager for about 4 years in the late 90s. and then joined the Rio Tinto uranium marketing team, and did about 4 years then on marketing of uranium. And that's where I really got my strongest founding for the industry, apart from the operational side, which I had from Olympic Dam. I think got a lot of founding information for the nuclear business as a whole. After that role, I had a brief time in bauxite aluminium marketing for Rio before becoming the founding CEO of Toro Energy Limited in 2006. And Toro was founded on the fundamental price increase that was occurring then, uranium assets in South Australia initially, then Northern Territory, and then of course we acquired the Wiluna uranium project in Western Australia. We took that to full approval by 2012-13. It was the first mine in Western Australia to receive full approval. I did jump out into the copper business again, post the Japanese tsunami. And now I'm CEO of Alligator on a part-time basis, essentially half-time basis while we build up our assets and get the market support. I'm also consulting on copper projects and community and political matters here in South Australia, and I'm on the board of a Swedish resources company, Copperstone Resources. So that's my founding basis, if you like.
Greg, can you tell the audience some more about some of the key people you've come to know in the uranium sector that are still here and why those relationships are important to you?
Oh, look, they certainly are. At the time I came into the industry, a lot of the old hands that are retired now, like James Eggins, Warren Davies, were in the marketing scene through the 80s, and along with a number of people that would be around and retired now. Then when I got into the marketing scene, I got heavily involved with both the Cameco guys who I knew, the Areva people, but in particular in the US, where I was doing a lot of marketing, I knew guys like Gunpat Money, Jim Graham, Fletcher Newton, a lot of them, all the Nuchem guys at the time that were around. So that's where I got a lot of my education, shall we say, about the uranium business and the nuclear fuel business. I was fortunate enough to do a range of deals involving a combination of uranium conversion and enrichment. So I learned a lot about the sort of packaging of nuclear fuel along with the potential just straight contract. So that was a great education. And also you meet a lot of people who've got very long experience in different aspects of the game. So Mark Chalmers I met back in Adelaide at that time, and guys like Tom Poole, who's probably forgotten more about ISR mining than I'll ever know. There was a lot of players around at the time that I learned a huge amount from, and it was a lot of fun in the industry, even though the times were tough. I remember going out when the spot price was around $6 or $7 a pound, and having to try and cover costs plus make a profit on a short-term contract. So it was a tough time in the market.
You know, one of the other things you know about quite a bit is some of the people who made many sales of uranium over the years before and going back to the last cycle. Can you speak just a little bit more to your involvement in that side? Some of the people you worked with, even if they weren't on the same team, and maybe if you can you give us a story to go along with it?
During those the early 2000s marketing days before the price started to really move, there was a lot of competition. There was long-term contracts coming out, in particular from US utilities, and there would always be a lot of competition between players. Of course, we had to keep commercial in confidence. We had to keep, in fact, the US antitrust laws are very, very strong, so you had to be very, very careful about what you're doing. And we did try, in particular, to give a serve to each other. And I remember several golf games playing with Scott Melby and James Dobchuk and others from Cameco, and every time we would pass them, you'd just give them another serve about a contract or about this. Nothing that you knew about, nothing that was confidential. It was all makeup. But we just really gave each other a hard time trying to get the competition was strong between suppliers. But nonetheless, it was also a time when you could travel, and it was just prior to the 9/11. But you could travel, you could get around easily, and so I spent a lot of time in the US talking to groups. And I remember catching up with the Exelon guys up in Chicago, and we had a fantastic time. And Had some good business together off and on, but good discussions, but in general above board on commercial sense. But I recall they had a favourite place they used to go for lunch. So we took them there for lunch and had a great lunch, good chat about things, and then they went back to work. I had to depart. But it was at their favourite pizza place. We drank iced tea, had a wonderful time, and here I was with the purchasing group of the biggest US nuclear utility, 21 reactors, and I think I spent about $37 on lunch. So it was like just an amazing feeling to talk with these guys, have a great time with them, learn so much from them and their experience. But it was just so easy to do. It was good fun.
Well, Greg, you were a mining manager at both Olympic Dam and also the Ranger mine. Can you speak to some of the key lessons you learned from this experience? And then, and how does that apply to your experience going into this next cycle for uranium?
The Olympic Dam mine at the time in South Australia from the early 80s had a lot of opposition. Most of your listeners will recall there was a very strong anti-nuclear sentiment right through the 70s and building up in the 80s, and that really started to impact the business. So there was a lot of sentiment in South Australia against the mine. People would say, look, why the hell do we need a mine at all, let alone a uranium mine? So people really had lost sight of the founding principles of wealth within a state or a country. But once we got established, it worked well. There was a huge focus on the radiation levels. Now, Olympic Dam's essentially a fairly low-grade uranium mine. We were starting it was copper focused in terms of grade, but we were getting about 0.08% uranium initially. Now it's down to 0.04, 0.05. But we really had a huge focus on radiation and radiation safety. So we had at least 3 monthly meetings with the head of the regulators of the Mines Department and the Health Commission. And what I really learned from that was this industry requires that focus. While we're at the levels where there is no danger of getting any impact on people, you have to have the focus on it. So I really learned that focus on radiation and radiation safety, but also communication. You didn't communicate the appropriate way with your workforce about these matters. It was very easy for them to read misinformation and panic. So I learned that a lot from the Olympic Dam days. We started up the mine successfully, and I was there for the first expansion before I moved. Look, in terms of Ranger, one of the key reasons I took the role at Ranger was to learn a lot about the Indigenous engagement side of the matters. This was about 97, and Australia had gone through some significant change in the first steps in recognition of Indigenous rights and a native title. So these were being incorporated. So it was a great chance for me to learn a lot about Indigenous matters. And in fact, it was the fundamental learning I had up there in that region of the Northern Territory and across the border into Arnhem Land was Indigenous people really want to get involved in matters. They might be opposed to uranium, many of them, some are not, but they wanted to be involved and understand. And so within the Ranger team, to their credit, they established fantastic communication techniques with Indigenous people. But more than that, we really had procedures in place and different training in place to bring Indigenous people into the workforce if they wished to. So we ended up in the open pit workforce of having almost half Indigenous employees, including female Indigenous employees, by the late 90s. So it was a great exercise. It was a lot of learning on my behalf, but really good fun. And that's stood me in good stead for the work we're doing now in Alligator, where we have engagement with up to 7 different traditional owner groups in the Arnhem Land region. So those 2 fundamental things were my learnings. I mean, you always learn about mine operations, and I've managed many mines, but in those two areas, the Indigenous matters and the radiation matters were my fundamental learnings.
Greg, your thoughts on where we are in this uranium market, and what do you see as the final key element to get things off the ground this time around?
Yeah, that's a great question. Look, our industry has rarely followed straight supply-demand fundamentals. Through the 70s and the 80s, it was very politically driven, with large government-owned enterprises involved, and that includes both Western government enterprises. So there was a lot of exploration for uranium from the 60s and 70s, driven by the nuclear boom. and it found a lot of resources. So most of the deposits we're mining nowadays, many of them were found back in the 60s and 70s, and that includes Cameco's projects, Ranger itself, etc. Then through the 80s, there was increasing regulatory costs for nuclear build. There was some accidents, and there was a very strong growing anti-nuclear activism. Pretty well the end of the 80s, early 90s sparked another massive change with Chernobyl and the opening up of USSR uranium stocks within a 3-year period. It created such a long period of low prices for uranium. Again, it was largely both accident and politically driven. Now, one of the few fundamental supply-demand balance-driven booms was in 2004 onwards. There was a growth in nuclear power. There had been no production and very little exploration for so many years. And of course, the China increase in nuclear demand really brought through a massive supply-demand fundamental boom. It was also driven by financial markets. There was a lot of speculation and things. But it was almost the first time, apart from back in the 70s, when there was this natural supply-demand fundamental balance. Of course, it ended with the Japanese tsunami. There was a huge amount of fear-mongering about what that was a significant, absolutely significant disaster, same as Chernobyl. Chernobyl was worse in terms, but the impact of the Japanese tsunami on our industry was similar. The recovery from that is occurring. There is, again, strong build. We've had a 15% growth in nuclear in 4 to 5 years just from new build. And there's no uranium production, or very little production. So we're getting back to a time where I think the rising fundamentals are going to come to the fore again. I'm not sure whether it'll be more controlled this time. And I debate this frequently with John Borshoff, who's one of the other great characters of our industry and has huge experience in our industry. Sometimes we think, well, surely we're going to get smarter here and let's do a nice manage. The price needs to increase to a certain level, production should increase, we get to a level of supply-demand fundamentals. But we always go in swings and roundabouts. There's a huge crash driven by emotion and fear sometimes, and then that can be followed by a massive boom driven by financial opportunity as well as fundamentals. So we're going to see an improvement in uranium and nuclear fuel market fundamentals back to the level where you need to make a reasonable profit from your operations. So that's uranium mining, from conversion, from enrichment. You have to build plants, you have to operate within a strong regulatory environment. So there needs to be a fundamental cost of production plus reasonable profit that should drive that. And we're not there yet. We'll have to improve the pricing to get to there. And there's lots of debate about when that will occur.
Absolutely. I think the mining industry, without profit, I don't think you would have it. And certainly it's going to come. I think the jury's still out on exactly when it's going to occur. But can you speak to, just for a moment, the debate with John would be interesting. But had Fukushima not happened, can you speak to where the price was and the amount of supply coming online? Would it have been different? Would the outcome have been different? Obviously, we know the political and social ramifications would have been different by now. But certainly the supply side, given the amount that was coming online at the price that we saw, was this inevitable that we would have gotten into a bear market?
All right. Look, going back to the original price increase, it was 2004-05 was the start of it. It really built up in 2006, of course. What was interesting about that time was there'd been so little work done on new project opportunities or new uranium projects for the last 15 years before that, that it took a huge amount of time for supply to react. So the price started moving in 2004-05, and in fact, supply went down in 2005-06. So the actual production from the existing operations went down. People were trying to scramble and increase production from operations, but there were some fundamental issues. There was a fire at Olympic Dam, there was a flood at MacArthur River. There's operational matters and occurrences that occur. So production actually went down. It didn't follow the price straight away. But then you started to get the buoyancy from new exploration and new potential projects and feasibilities and things that are out there. So you had potential production following the market. But so many people underestimated what it takes to get a uranium mine going. Within Toro Energy at the time, we had our target, once we had a reasonable resource at Wiluna, our target was get approval. Absolutely get approval. Approval is paramount to being able to operate. And I'll jump out of the story for a minute to go back to one from about late 70s, early 80s. In the late 70s, there were two new uranium projects being explored and developed. One was at Rossing in Namibia. The other one was at Jabiluka in the Northern Territory. At the time, Rossing got approval at a grade of 0.05% roughly and kept going. It's been going for 34 years. Jabiluka at a grade of 0.5%, 10 times the grade, didn't get approval and didn't get going. Sometimes the fundamentals in uranium are about having your ducks in a row, you have the right community and government relations and your approval processes, and that will mean you can achieve production. So I think we started to see that in the last boom towards 2008, 9, 10 and into 11, where there were projects advancing through approval and getting approval, which potentially could have gone ahead. At the time of the Japanese tsunami, the uranium price was $72 a pound and increasing. It had dropped back down from its peak of 130 or so, but it had come back down to around 60, 70, but it was increasing again. So look, I believe there would have been a range of mines start up. Some of them may not have succeeded to make a profit because you underestimate the cost of operating a uranium mine. There's a general rule of thumb I use, and that is that if you have a new mine to establish requiring capital, and you have an operating cost of, let's say, $27 a pound US, you need about double that to kick the mine off as a price. If you already have a plant established, that's fine. You can start it a bit lower, but in generally, people underestimated what it takes to get a uranium mine going. So I think there would have been a number commence. I don't think it would have swamped the market because it's not that easy to start mines. Ultimately, I would have think there would have been some fundamental supply-demand balance. Some of those mines that might have managed to start, let's say from 2011 onwards, might have failed, but many would have kept going. So that's my view.
And thoughts on three things. What can derail the market going forward? When do you see this actually taking place? What do you see as far as, I mean, if you can give us a range, Greg? I know predictions are everybody has opinions and predictions are the same, but can you tell us when you see this market starting to turn, what can derail it this time around, and how should investors prepare?
We have a growing nuclear demand or uranium demand at the moment from new nuclear build, which I think is on a path that's not going to stop quickly at the moment. It's a steady growth rather than a, let's call it a massive planned growth from back in 2006-7. So it's a steady growth. There is not enough uranium supply to supply into that growth at the moment. So new mines have to either restart or come online. So there will be a growth in production going forward. There is a massive build cost, in particular in Western countries, where we have had less standardized design. And that is probably going to impact the build of large nuclear plants in let's call them Western or OECD countries. There is an increasing build of large reactors in both China, Asia, and the Middle East, and we will see that for a while. The unknown to me, and I know a little bit about the technicalities, but not a great amount, is the small modular reactor market. I think this is where there is a chance for a significant change, but it's going to take some time. You know, the first commercialized one may be operating by 2025. And then you probably, if they're successful and they get really focused on, you might see through the 2030s a massive increase in small modular reactors. Now, of course, they use sometimes a different fuel. They use a more efficient basis of fuel generally. But it's to some extent it's a bit unknown what demand in the market that will create. But I think in combination with the SMRs coming on, you might see a drop-off in the build of big new reactors purely and simply due to cost, regulatory burden, and the time it takes to get them going. So you might see a fundamental plateauing or shift in that case. In terms of a political impetus, my God, it's hard to predict. Within the nuclear industry, right from the day I was involved, and especially in marketing, what we are so conscious of is that one incident or accident from anyone impacts us all. We've seen that every time. So I know that within the WANO, the World Association of Nuclear Operators, and other organisations, NEI, etc., they focus intensely on the sharing of knowledge and safety and the openness of safety matters. Now, that has to continue. Another significant accident could damage that large-scale, large reactor nuclear business almost beyond repair. Now, I don't know whether that'll occur because so many people depend on the energy, but it's a high risk. So we need to be very conscious of that in all our industries. The other political, is there any other political motivation? Look, there's an increase in renewables, and I think renewables, both wind and solar, are getting cheaper. They're getting more efficient. They're getting supported by capacity and battery, which helps them manage. But there's still a fundamental load base needed behind them, and that's currently, well, it's going to be gas. If the hydrogen industry takes off, that could become a replacement for gas and potentially impact the nuclear facility. So the chief scientist in Australia gave a recent talk where he talked about this. There's a freeway of energy with about 7 lanes in it, ranging from coal right through to solar at the moment. The activists in energy want to take it from 7 lanes down to 2, just solar and wind. But that's essentially almost impossible. We have to have a number of lanes, either it's gas or it's hydrogen or it's nuclear, in this mix going forward if there is a desire to phase out coal. So whether there'll be a political action which would grow that could force the phasing out of other sources of power and into pure renewables, I don't know. I hope the world's a bit more pragmatic than that, but I see we sometimes get a bit carried away.
You know, one of the things I think at some point going forward, certainly within this decade, that Australia will see nuclear energy come along. And then with the use of SMRs, I see that as really a net growth, because when you take a smaller modular reactor and you start to apply it, and if it gets accepted, starting potentially in the US by 2025 or so, once that starts to get adopted, the small scale of those will be, in my opinion, used more frequently for applications that wouldn't otherwise be available if you were dealing with large conventional reactors. I think that the adaptation of SMRs, if they can get through in some of the major jurisdictions like the US, I see that really, to me, is a net positive for the industry, both from a nuclear power standpoint and then also from the mining side. So that's my thoughts on it.
Just a quick question. I think you're right. I think if Australia is going to adopt nuclear, it'll adopt SMR. We actually are spread enough where it's almost impractical or difficult to build a big 1 gigawatt, 1.5 gigawatt reactor. There's only very few places in Australia that can handle that. In my own state of South Australia, the coal plant that shut down was 260 kilowatt boilers, perfectly amenable to replacing them with 200 or 250 megawatt SMR. So I think you're right. I think there'll be places that will use SMR that would not use large reactors. And you could be right in terms of the net growth going forward.
Yes, just with regards to renewables, look, we're not going to strap our submarines with wind turbines and solar panels. We're not going to strap our spaceships with wind turbines and solar panels. So at the end of the day, nuclear is going to prevail. It doesn't compare at this moment, and I suspect for at least the next few decades, nothing will come along to even become close to replacing it, given the time frame it takes to do anything, and just the fact that the industry is reluctant to convert or change, and it takes a significant amount of time to make those changes. But tell us about how should investors approach the market now? Should they wait? Or should investors really be prepared and already have kind of a foot in the water with regards to uranium? Can you speak to how investors should really be prepared at this point in the game if you're looking to use uranium as a vehicle for investment purposes? How should they be placed in 2020?
Well, there does seem to be generally two types of investors that come into the uranium business. There's those that understand the fundamentals a little more and would be willing to take a bit of buy and hold strategy with some funds, not massive perhaps, but some. And so I think you'll find those investors are probably already in the market in their chosen stocks. They like this, they like that, etc. So they're probably already there. And I think that's a reasonable thing, because we're seeing we're seeing the continuous build of nuclear, the increasing demand, and the upset of different political things going on, like the US matters at the moment, which any of them get sorted, or if there's a fundamental issue in terms of any production in uranium, you'll see a price move. So if you're already set in your favourite company with a certain number of funds you're willing to hold, I think that's the right thing to do, and that's your style of investing. A lot of the groups that I'm aware of in Australia and some in Europe that invest tend to say, I'll come in when I see it's definitely moving. So they're happy to lose the first 10 to 20% growth in their potential target stocks, but they want to make sure there's already a fundamental move on before they come in. So they would be the investors that move from commodity to commodity in many ways, and so we'll try to pick the winner. Those guys won't come in early no matter what. But I think those who understand the fundamentals and the readers of your reports and other matters would probably already be set in a few key stocks that they'd like. Then it's a matter of saying, okay, do I jump into some greater risk stocks? Do I sit and hold with some of the more certain ones? That's almost the question you want to take now. And I'm trying not to get into a price prediction of when things might move, but I am more heartened by the fact that there's a little buoyancy in the conversion and enrichment pricing off and on. That will start to impact things such as the secondary supply of uranium, and I think that's where there's a first change in those nuclear fuel costs will start to indicate a change in uranium.
Absolutely, I agree, and we're there. That's starting to occur. I think there's some of the folks that are waiting on the sidelines. I think they're not going to be able to get in until it's 300 to 500% before they get convinced. Because if you take a look back at 2016, you had fantastic moves with just about all of the stocks in the sector. I mean, I don't think there was any stock that didn't go 200-300%, and I know of some that got close to 800-900% just in 2016 alone, just off that. What was it? Maybe a 10-month period. So it'll be interesting to see what happens with those folks when they decide that they realize that now, yeah, this is the uptrend, let's get in. So it's going to be interesting to see how that goes. But I think you're right. I think that you do have those types that are hanging around, I guess, and are watching what's going on. Well, let's talk about Alligator. Tell us first, Greg, the capital structure, your capital needs this year, and then also if you can talk to the key shareholder backers that are on the roster.
All right, well, look, Alligator is a very small explorer, founded in 2010, largely with a group of uranium explorers, experienced uranium explorers who are involved in the Westmoreland project and other projects who took up ground in Arnhem Land. We've held the ground in Arnhem Land and explored it for many years. A lot of it's been about fundamental scientific exploration, because in the old days it was fly over, look for radiation, drill it. Whereas now it's really looking for the deeper structures and things that have created the Ranger project and the Jabiluka mine. So they're the fundamentals we're doing. In terms of where we see an overall sense in Alligator, we've only made a small uranium resource discovery in Arnhem Land. We're a very small company, only about a 3 million market cap. We have a lot of shares on issue, and we will need to do some fundamental recapitalization of the company going forward. But at the moment, we've tended to spend less on our Western Arnhem Land exploration because it is expensive exploration there. The prizes are great. It's the highest grade uranium grade area in the country. And we have the second largest land holding. We're about to increase that. We have good relationships. We want to maintain that. But that area of exploration really needs good market support. Well, we picked up a new conceptual project in South Australia to the north of the Honeymoon area in the same sort of formations, but associated with the Cooper Basin oil and gas fields. And the concept here in Big Lake Uranium is the largest ISR fields in the world are associated in some way with hydrocarbon basins, Kazakhstan and Texas and Wyoming. But there's only been one company 10 years ago did a little bit of drilling around some of the uranium spikes found in the oil and gas wells of the Cooper Basin in the far north of South Australia. And we believe they didn't really look at where the potential paleochannel traps are, which is some distance from where the spikes were found. So we are evaluating that, some initial work done by 2 private geos. We're expanding on it, and it's a fairly cheap exploration. We're funded to do that through this year, and we're currently negotiating the access agreements with the local Indigenous groups, and then we'll be getting on the ground for some very quick passive seismic EM work, followed up by some air core drilling. Now, that's conceptual, but it's a very interesting concept. There's 200 to 300 ppm uranium already within the area. There's known links to the deeper uranium basement, and there's fluids. So we're going to test that concept. But this year, that will be our exploration play, and we are making sure we maintain the relationships in our Arnhem Land work. We have some very, very good targets there. We engaged a couple of very experienced uranium geologists to help us last year review the Arnhem Land area. And while I won't name them, they've got more than 40 years experience in the business or on the discovery teams of Ranger and other projects. So they've helped us retarget and refocus on the structural and Archean basement models we need to look for the right uranium in Arnhem Land. And so when the market's ready, we'll be ready to go there. The nickel cobalt in Northern Italy is an interesting play. Is getting some interest from within Europe, where there's fundamental desire from European Union and countries for these strategic minerals. So we'll look at that as a separate entity and potentially attract investment into it from within Europe. But our focus this year is Big Lake uranium, test that concept, have a good look around that area because it just hasn't been done before. There is uranium present and it's associated with hydrocarbons, which of course is reductant for this ISR style deposit. So Arnhem Land and Big Lake, they're our key focus. But we had a fundamental shift in the board last year, and we have agreed that we are going to look at other uranium projects. So we're currently looking at existing resource dormant projects within Australia, within the US, and some within Africa. So we have some support from our key shareholders to take that forward. And we've been active in that for some time, but we'll make announcements of those sort of things as and when they occur, of course. In terms of the shareholding of the group, the founding shareholders were largely retail, and Taylor Collison out of Sydney and Adelaide. They came into the company in 2010. In 2013, there was a shift. We had a new company, McCallum Group, a private group, which was owned and run by Peter McIntyre and John Main. Your listeners will know Peter McIntyre, who was the EMD of Extract when they discovered the Husab deposit, and John Main was on the board and was the head of exploration there. John, in particular, was head of Rio Tinto's exploration throughout the Americas for many, many years in times gone by, and is a brilliant explorationist. And they really reshaped the thinking of the company within Alligator back in 2014, 15, 16 to really take a more scientific approach in Arnhem Land in particular. And that's why we brought in a lot of R&D, a lot of CSIRO research work from Australia. And we have some techniques now for looking underneath the sandstone and finding very weak signals of potential locations of deposits, which we'd like to pursue in the future, subject to market. So McCallum Group is still the largest shareholder. We still have support from key clients of Taylor Collison and BW Equities out of Melbourne, and they're the main shareholders in the group. On the board, Peter McIntyre's on the board, John Main's now retired, and myself, Andrew Vigar from Mining, who's the principal of Mining Associates, the founding MD. In fact, he's on the board. And so we have a combination of good mine operations people and good exploration people across our board.
Can you talk about, and from my understanding, Alligator Energy is your chosen uranium vehicle, and it's something that you're going to focus on as this market improves. Mm-hmm. Can you speak to, and I know you wouldn't name the geologists, but can you speak to just a little bit more about key management, what you see there, and then also can you speak to when Alligator is going to start to pull the trigger when the market provides you enough evidence to start moving?
Okay, well, look, in our team currently, Pete Morehouse, our exploration manager, he's been working with Alligator 10 years. He was a senior geologist on a number of uranium projects, both at Westmoreland, in Western Australia and the Cow Creek projects and in Africa. So he's got a broad-based experience in uranium. We have a project geologist who's also got 7 to 10 years in experience in uranium. We have a call on about 3 other very experienced geological consultants, as I mentioned before, who have a broad range of experience, and we call them in to review projects or review tasks and going forward. Now, along with that, because we're now looking at potential resource projects that we'd like to bring into the group in the future, we have a core consulting team, which I won't name, that I know from my past and that have fundamental experience in uranium processing, in ISR, in environmental and approvals processes, as well as, of course, the geology, as I mentioned. So we have a team established behind us of around 4 to 5 people that we can call on to help evaluate projects and take them forward. And as a small company, we flex. We conserve cash. As your listeners will know, if they've looked at our website, I'm part-time. I will flex my time up. If we're doing a deal like Big Lake, we get it in place, and then I flex my time down and the geologists flex their time up. So we make sure we use shareholders' cash, and we're all shareholders as well. We make sure we use shareholders' cash wisely to match the fundamental interest in the market and the achievements we want to make. So right now we're focused on some geology approvals and geology in the ground, but behind the scenes, myself and the M&A guys are looking at other projects.
And what is your position, Greg, now that we're on that topic a little bit, what is your position on compensation for an early stage company, and how are you applying that to Alligator?
As I mentioned, we flex. So I'm a director of the company and I get, for example, a director stipend. And I assume that takes care of at least 3 days a month of my work, no question. And then I would just, I've got a fairly modest salary day rate that goes on top of that. So I'm happy to maintain that. We have some incentive targets, short and long term, which were purely just shares. So we are fundamentally linked to the success of the company, and that's the same applies to the other employees in the company. We flex the day rate. We manage the workload such that, well, there's a lot to do at the moment, but now there's not, you back off. And so it means to maintain that core team, you need to allow them sometimes to do some other things, which we're fine to do. So we have that flexibility of maintaining the core team by allowing them to jump out and do some other things. And more small explorers are doing that sort of thing. You need to make sure that you're doing the work at the pace you can, because sometimes you have a delay for an approval or permits or engagement or negotiations, and it's silly to just maintain full-time geologists being idle while you wait for that. So we really have a flexible structure and remuneration within our company, and we'll maintain that until such a time that we're all flat out, and then we need to recruit. And that's just a sensible approach as a shareholder and as a part owner of the company and as an MD.
I agree 100%. I think that I would include bear markets to that list as well, where you don't need the full-time effort. And I think that makes a lot of sense. And speak to your guys' capital needs for 2020. And then also, can you speak to the Alligator River uranium area? Talk about the importance of this area and why you guys continue to remain focused there.
Okay, well, look, we have the capital we need for our immediate exploration programs in South Australia. They're modest. We as I just described, we can stretch that capital, but we can get the work done on the ground to initiate potential discoveries, hopefully, and take them forward. And that should generate its own interest in that case. In terms of future capital needs, it's going to depend on the market. We have very, very much targets in Arnhem Land, and your mention of Alligator River's uranium project area. We're about to announce an increased area there. We've been working, and it's been public knowledge in our announcements, we've been working on this package of tenements called Narberlek North. This is a package of 8 tenements adjacent to the historical Narberlek mine, which was a high-grade mine. It was 1.84%, operated during the 80s and mined out, and also adjacent to one of the highest grade intersections ever found in Arnhem Land of around 6%. So this Narberlek North package is going through the final stages of being granted. This is very interesting for us because it's to the north of the area we've been working. It's got less sandstone cover, and in some places very little. And so our techniques that we've developed for looking under the sandstone should be much more effective. It should be cheaper exploration. It's more accessible. But it's got the potential to, again, have that high-grade uranium, which is the Arnhem Land area is known for. So that's a very exciting development for us. And in some of the presentations we've put out last year, in particular, we've done a huge amount of study into the Ranger 3 Deeps deposit. So the Ranger ore bodies that were mined, Ranger 1 and Ranger 3, were at the surface. In fact, they were, the unconformity of the sandstone been eroded away, and they were at the surface now mined, down by radiometrics. Ranger 3 Deeps is a structurally related project, and it really forms the basis of formation of the fluids that come up from below and into the structures that form these Ranger ore bodies. And we're a fundamental believer that the association with the Archean basement, where the granite source is, and these structures are what is fundamental to these sort of deposits, not the unconformity. The unconformity is very key in the Athabasca region, but it's not, we don't believe it's as key here. Only small deposits have been found around the unconformity. The big deposits have been found structurally related to the source of uranium in the basement. And that's the science work that we've done, the geology work we've done, and that's what we'd like to focus on going forwards. So at the right time in the market, we've got a huge series of targets. We've whittled down to a key number of priorities. And the combination of the Siegel structural work, the fundamental radiometric lead isotope analysis, and that we've done is really starting to highlight some target areas we'd like to drill. So that area is the proven high-grade zone in Australia, and that's why we fundamentally want to be there.
So just so I'm clear, so you guys are pretty much, you guys have already identified what you need to punch, but you're waiting for the market to move before you punch them. So you're not even going to try to screw around and try to do some drills here and look at some stuff here. You're not even going to mess with that. You already know what you want to punch. When the market conditions are right, you're going to punch them, and it's going to be pretty cut and dried. Is that correct?
Fundamentally, for Arnhem Land, to a large extent, yes. We can do some initial work on the ground, which is the cheap work that we do in terms of initial surveys for lead isotope, chemical, those sort of things, and the deep work, and that can be fairly inexpensive. And we'll prepare that and get that underway. But the drilling required to get this done requires a certain amount of funds, and look, we know there will be a move in the market. We believe that will occur. We're looking at other projects like Big Lake and that to help some fundamental value to shareholders. But the big value to shareholders when the market supports in really looking at these deeper structural targets that we've now found in Arnhem Land. But they cost some money. And we're not willing to dilute our shareholders at the current low price to do that just yet. We need to have the right fundamental market support.
Right, and you guys have pretty much set up right now, the way it goes is the burn rate for the company is very low, and essentially it's just waiting for the market conditions to turn, which is much better, in my opinion, than trying to continue to delineate and give results, etc., when the market doesn't care. That's a good point to bring up. Let's shift over to the Big Lake Uranium Project. Can you just talk briefly about the interest that you guys have at this time, and what is the plan with this asset going forward?
Yeah, well, this area in the northern part of South Australia, where there's already been proven ISR uranium deposits from Beverly to 4 Mile to Honeymoon, all through that region. In the northern part of this area, there's been very little exploration. One, because it's a long way out, but two, there's no fundamental radioactive signal at surface. So to the west of Beverly, where the formation waters come out of the Flinders Ranges, there's radioactive signals. So there were sort of logical reasons to look in that area. Then the Big Lake uranium area, the Cooper Basin area, the oil and gas deposits are 2.5 to 3 kilometres deep. You've got dome structures down there where those areas are trapped, but you've got structures, deep vertical structures that intersect the basement granite rocks where these domes are. And those granites are exceedingly hot, as in geothermally hot. And they're geothermally hot because they have a relatively higher level of uranium present in the granites. That's a known fact. There's a geothermal map in our presentations of the heat and the heat flow in the area, and it really is a big heat target underneath that Cooper Basin. So there's active uranium present. There are structures linking that uranium and the upshoot of geothermal fluids up to surface sediments. There are gamma spikes in the oil and gas wells that are drilled because they do gamma log to look at structure. And these gamma spikes can look very much like the tail of uranium channels. Now, what we're looking for is down hydraulic gradient from those basin structures. Has there been enough accumulation of uranium through fluids flowing up from down deep into these air formation channels, which is the same formation as essentially Honeyman and Beverly? And no one's tested them. There is uranium present there. Some drilling in 2010, as I mentioned, found 200 to 300 ppm in and around the oil and gas wells. But we're now looking some kilometres away from that area where we believe the traps are. So we're going to be looking for paleo channels and in shallow sediments. This is 100 to 200 metres deep max, using passive seismic, which is, most people know, is just an instrument on the ground measuring natural ground noise. There is no induced seismic, or airborne EM, which is a quick 2 to 3 day task. So that's a very quick way to identify channels. And then a Toyota four-wheel drive mounted air core rig is adequate to test these in terms of simple drilling. So you're talking about an expenditure of a few $100,000 to do this exploration as compared to Arnhem Land, where the prize could be bigger, but the exploration is more expensive. So Big Lake offers a great opportunity with the concept. Existing uranium present, but is there the traps that could form it? There are these sort of traps in the other parts of South Australia to the south of the zone. So we think there's some good opportunity for testing, and that's why we're looking at it.
Well, Greg, what stage in the market will the company pull the trigger on ramping up efforts for Alligator? Can you speak to what you guys are looking for in the market? Maybe it's a price, maybe it's certain sentiment. Can you speak to that? And then also strategy, end game for Alligator. What's the exit for the company? Are you guys looking at becoming a producer, or do you guys see Alligator as an acquisition?
3 points I want to make to answer your questions. The first is, apart from our exploration, as I mentioned, because of our operational team background and our experienced team of consultants, we are looking for fundamentally economic resource projects which are in holding patterns in certain jurisdictions around Australia and overseas. So we think it's the right time to accumulate projects, in particular resource projects, existing resource projects within uranium. So we are working on that now, and we're going to continue that. So that can make a fundamental shift in the asset structure of the company if we're successful in doing that. The second thing is, in what will give us a signal going forward, it will be when we can get the support to do some reasonable drilling programs at our key targets in Arnhem Land, because they've got let's say, the best chance of getting the highest grade, most likely projects. So if that occurs and we can get the $2 to $3 million or more that we might need to do that work, then we'll do that. So that's really going to depend on our share price, on the market support, and I can't really say where that is. It might be price related, uranium price related. It might be some other factor. And the third aspect, we have the expertise within our group, both within myself and our team, but also the access to expertise on a consulting basis to start up fundamental uranium mining operations. If we found a very significant project within Arnhem Land, logically, you would probably do that in joint venture with a larger company, because that will be more expensive. It will be a larger potential project. It will be longer term, and sensibly, as a small company, it will be sensible to do a JV with a large group. With a smaller fundamental project, for example, if we made an ISR discovery at Big Lake and we expanded it out and it looked economic, that's something we could manage, I think, through our group, bringing in the expertise necessary, of which there's a vast quantity in South Australia, to take that forward. So we are sensible about this. We know from the last uranium boom, not many projects got started. A lot of people believe they could become operators, but it takes a certain skill set. And of course, John Borshop and I have discussed this many, many times about the skill set you need to get a uranium mining operation going. And it's the sort of learnings that I mentioned to you before, the fundamental management of radiation safety issues, otherwise governments will shut you down. The fundamental engagement with community and Indigenous people, otherwise you don't get started. So there's a lot of work to do, and not every exploration company is set up to do that. We have a combination of skills and we could do, we believe, a small operation is set up. I hope we find a large discovery, and I hope that makes our shareholders happy. That's their aim.
Greg, who should investors pay attention to in this market besides yourself?
Okay, well, look, there's not many companies that have made money out of uranium, and it's really a few of the major groups, such as Cameco, that have made money out of uranium production in a consistent manner. They manage themselves up and down. They manage the market that they can to their extent in terms of their marketing, and they can make fundamental dollars. There are companies which have successfully started mining operations, I think, in a good manner. I'm talking about Toro Energy in Peninsula, of course, Paladin back in John days, and they started up in Namibia. And I think you need to look for people who take a sensible, realistic approach to starting up a uranium operation or have access to uranium operation. And they know fundamentals of approvals, of government, and of operations. Without that, you're going to go nowhere. So I think the companies I mentioned are ones that have already been in place and are going forward. I think UEC started up projects with their own care and maintenance. I believe there'll be some other US projects that will start up. I also believe that there'll be the right longevity of price. You will get some of the more significant operations start up in Africa. They are generally lower grade, and the issue there is, of course, politics can change. So more recently, Tanzanian politics has become a little bit of an issue, whereas 5 or 6 years ago, it was perfectly stable. So you've got to be careful in Africa in terms of which projects and which jurisdictions could start at what time. Within Australia, there is more and more an amenable government approach to uranium mining. Yes, there's still individual states that can change their mind, but in general now, even those governments that might be in power in a state that might have a fundamental opposition to uranium mining, if a mine is approved or is operating, they'll honour that and support that. So Australia has now had a shift in its approach. So I think there's Australian companies. Beverly, of course, is still going well with General Atomics. Boss Resources have got a good asset there because of the original expenditure that's put in there. So they are getting themselves ready to go fundamentally here, which I think is exciting. And they're probably the ones that I'm more familiar with because I focus on the operators who are operating in a tight manner and making sure they make a profitable operation.
Well, I think that's a good place for investors to start, Greg. So I think we'll leave that part there. Why should potential investors who are listening look hard at Alligator Energy as one of their uranium exposure vehicles? What would you say to them?
Alligator Energy has a significant skill base of geological scientific research, in particular in the Arnhem Land region, which is the highest grade region of Australia with some of the best potential. We have the second largest land holding in that area apart from Vimy, which is, and our land holding is about to increase. So the best opportunity for a significant discovery to create a mine that could run for 30 or 40 years like Ranger is in that region. And so that's why we're there. So that's we're well advanced in that, as advanced as only one or maybe two other companies in that region. So that's why we're excited. We are willing to jump out and look at other opportunities. We have a geological base in terms of knowledge that's allowed us to look at things like Big Lake. There's a fundamental belief that ISR uranium mining will continue as a major source of uranium for the future. It's currently 55% of the world's uranium production. The potential to have a new ISR field in South Australia, which is a massively supportive state for uranium, and be able to start and advance a project there is fantastic. It's one of the reasons we like South Australia. I've worked here a lot. I know the area well. I know the government well, and they have a very, very strong skill base. So in terms of uranium, the second largest land holding and well advanced geological science in Arnhem Land, the highest grade potential area in Australia, and now a project in South Australia, the best jurisdiction to operate for uranium in Australia. So they would be the two fundamental core reasons that I think shareholders should be interested. Along with that, we're realistic. There's a flat uranium market at the moment. We have a nickel cobalt play in northern Italy, which is awaiting drill permits, and we're generating interest out of Europe to give that its own support. So that's the combination of reasons, I think.
And best way for the audience to reach out to you and to the company?
Well, the website that we have for alligatorenergy.com.au has our contact details and information on it, and we keep that as up to date as we can. Along with that, in our presentations, you'll see phone numbers and contact numbers which are off our website. Please feel free to give me a call directly. Anyone that's interested in the company, I'm happy to talk.
All right, sir. Well, thanks for coming on, and look forward to chatting again soon, Greg.
Thank you very much for the opportunity, Andrew. It's been good to be able to talk to your listeners. Thank you.